Hi traders, welcome to Admiral Markets. My name is Chris, and today's webinar is going to take a look at technical analysis, the charts, Forex market, maybe some commodities and other instruments. If you're interested, let me know. But before we take a look at that, be aware of these two disclaimers. First of all, the webinar is shown to a global audience but may not be suitable for everyone. To find out if it is suitable for you, please visit admiralmarketsglobal.com, select your country of residence, and then contact an appropriate entity. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, thanks for joining. Hope that everyone had a great weekend and hope that you had a good Monday, Tuesday, start of the week. Myself, I'm back in Prague and had some little bit of time off here and there, a couple of weeks, 2 weeks or so, 2.5 weeks in the mountains. It was a bit rainy, but ultimately was nice to get some mountain relaxation. um, Good to see Edith here in the webinar, and John too, and anyone who wants to use the chat, feel free, of course, to reach out through that. Um, Edith, how are you doing? I haven't spoken to you in a while, so it's great to see you. John is asking about trading platform. At this moment, I'm still using MT4. Nanette has tried the MT5, and he's very excited about that, and he's getting me excited about that. So I think that soon I will try that. I think maybe next week when I have a little bit of time left, I'll um, open or try that out on MT5. You can check that out with Admiral Markets. Go to platforms and check out MetaTrader 5. There's actually some message here when you go to admiralmarkets.com, and it says the brand new Admiral.mt5 is out, or the account is here, sorry. But it's also, no, it's also referring to the MetaTrader 5 Supreme Edition. So, yeah, basically, that is something you might want to check out after this webinar, perhaps. Let's see. Otherwise, you have, of course, the website offers a lot of things. Webinars, as you can see here, Master of Traders, analytics, what you can trade, how you can start trading, etc. But for today's webinar, we're going to take a look at the markets. Of course, there's already promised at the beginning. And we're going to take a look at what's happening with regard to the euro dollar, pound dollar, dollar yen, Aussie, and any other currency pairs you have in mind. The focus for today is classical technical analysis, trend lines, fibs, channels, um, patterns, support and resistance, etc. We'll kick off with the euro dollar, first of all. And Edith is getting back into the swing of things with Forex. Great to hear that. Your dollar is moving down. Maybe you watched yesterday's webinar. Did you maybe catch my analysis? I was saying that my plan yesterday, I was actually joining Nenet's webinar as an exception because of the German elections on Sunday. And I was talking about the daily candle, which is important for my analysis, right? And the daily candle had a pretty good close near the low. So my name is Chris. John is asking who's talking. Chris is here. Nenet will not be joining today. He will have his webinar tomorrow. So the candle close, we can take a look at that very statistically. The candle close, right? Wait, 1 second. I'm looking for the data here to pop up. There it is. Sorry, somehow. All right, there we go. So I measured the wick, basically, right? How close is the close near the low? And if you measure that at 17 pips off, away from the close, but how big is the candle? We have to measure the high and the low. The high and the low, basically, the difference between high and low here is 105 pips, 104 to be precise, maybe. So we need to divide 17 by 104, if I did my math correctly. Yes, looks so. So we have 17 divided by 104. So you might be wondering why I'm taking the effort and time to show you this. What is the goal of that? Well, basically, uh, it shows you the power of the candle. If the close is near the low, it's bearish, right? Or in this case, bearish. But if the bearish momentum, if the candle closes near the high, it would be bullish momentum, right? So basically, I use I use a percentage. If the wick is 10, 5, 15% only, that's a strong candle close. Of course, if it's right at the close, it's very strong. That's not the only important part, though. The candle size is important too, and 104 pips is a above average probably daily candle for the euro dollar when looking at all these daily candles of the last 40 days or so, relatively slightly above average, so that's fine. So slightly above average candle in this case, a good candle close because, well, it's about 17%, a bit less, 16% probably, 104. 100 is, if the candle were 100 pips, it would be 17%, it's 104, so probably around 16%. That's fine, it's a good candle close showing bearish strength. It also, the spot when it happened is pretty interesting because it's breaking a candle, a trend line channel, right? And a channel that has lasted for quite a while. The break did not break the horizontal support, but ultimately, I think, considering the candle itself, it was enough. And indeed, we got the follow through. So yesterday, or I should say earlier today, yesterday we got the confirmation. I was saying that price should retrace up to 118.30 up to 118.70 max, should not break above 119. So when you look at this, basically, this bear flag, I was looking for a bear flag. That's what happened. We got the bear flag and the break. So did anyone perhaps trade this? This was pre-fact, and now we can see how this looks like post-fact. But you can see that how this analysis shaped up. The daily candle close, the bear flag confirmation, the bounce at S1, and if we put a fib from here to here, 23.6 fib, and then the turn plus continuation down to the S2, the minus 61.8 target, and the 117.50 round level, or almost round level. It was about 13 pips away from that. Did anyone trade this by any chance? I talk about this in a bit longer than usual because we talked about this. I talked about this specifically yesterday evening. So I want to show the connection between pre-fact and post-fact. Now, great, perfect. So if anyone is in that trade, this candle, the recent 1 hour candle, is a great high to trail stop, in my opinion, 117.90. 93 or so to lock in. Well, it depends where you enter, of course, but probably 50 pips, maybe even 60, right? Depends exactly where you enter. If you're looking for candlestick confirmations, this candle may be okay. This one seems to be fine. Ultimately, this one is the best, but that eats up quite a lot of space. So the retracement there would be probably useful. So those are all typical entries for the euro dollar. I mean, if you look at maybe some of you follow my SWOT trading. I just quickly show you how that will look like, and then we'll move on to what can happen in the future. If you do that, then the entry. Sorry about that. One of the entries would be here, right? This was actually before the big candle I mentioned, because there's an arrow. So that would be an entry around 118.40, right? That's the breakout. That's an hourly breakout. Everything is there and looking good for continuation. You can see the moving averages aligned, red candles. This is only the candles are only for entry charts. And if you're looking for a 15-minute chart entry, it would look like this. Basically, up in here, we would have had the fib, right, from here to here. But even without the fib, let's take off the fib because I don't want to make it too complicated. right? Basically, let me zoom in a little bit so you can see that a bit better. There we go. And basically, we get the turn here, red arrows, red candles, another one right here. Those are the 2 or 3 main signals on the 50-minute chart for downside, and a nice downside we get so far. So that's still developing. Wiz tool, very handy for targets. And if you look at the Wiz tool, you can use it on 50-minute chart or 1-hour chart. And if you look at that, basically on the 1-hour chart, there we go. I'm not sure if that's the best spot actually. Okay, probably okay. Although this top could be used as well. You can see that price is now getting below the third level. I think maybe we can even use this top. But anyhow, I don't want to get too into detail. Wiz levels are very good for targets in any case. But to move on, with regard to the next step, I think that now is not a good time to look for any shorts because price is too close to 117.50, which is a potential bouncing spot because of the S2. It's a weekly pivot. It's also a quarter level. And price might be completing, for instance, an ABC zigzag like this. So it might be tempting to say, hey, look at this break, right? But this is now not a good moment. The break happened. The break offered a good trade earlier today, but entering now, I think, would be chasing the trade. So what often happens, well, I don't know often, but sometimes happens is that you see a trade that looked good in the past, and now now it could be tempting to trade it now, but that's not good. Now I think it's too late. I do think that there could be a new pattern, there could be some new market structure eventually that might be well set up for more downside, but I don't think it's a good moment now. If this is an ABC zigzag, basically price pretty much close to the minus 61.8 target. You see it's about 17 pips away before it hits that level. So this is a bouncing spot, and if anything, price can go either sideways. In that case, more downside could be interesting, or price makes a more aggressive rally and downside is not interesting, right? So we need to look at the larger time frame to get an idea of what could happen at 117.50. If it breaks 117.50 tomorrow, right, that changes things. But right now, with the end of London, with an entire quiet session ahead of us, based on the European and the London session closing, your dollar will probably statistically not have a high chance of moving too much. So what can we basically analyze to get an idea of the next trade? Let's take a look at the bigger market structure on the euro dollar. And we can see that this channel is broken, that we know already. There was a head and shoulders pattern here. That neckline broke too with this. But the moving averages are still bullishly lined. Price is still, ultimately, this could still be a retracement. So we can put a fib on this swing high, swing low and take a look, for instance, like this, price at the 23.6 fib, or like this, price at the 38.2 fib, or like this, again, 23.6 fib. So 117.50 is pretty much still an important level. We have bottoms here too in play. So we got to be careful of that as well. So from this point of view, I think considering the support, the potential, well, it is support, but let's say this way, it will be important to see how price responds to that support level. So one step would be to look at today's daily candle. How is the candle close in relationship to the low and support? If it's again a bearish candle like this, tomorrow we could see continuation. So that's one step, I think. If price just makes a bear flag, closes like this, and again on the hourly chart makes a bear flag, there could be one more break and one more lower low. That is a potential setup right there. This could complete 5 waves as well. So if there's no bear flag, if today is a strong candle close, but tomorrow there's a bear flag like this, but tomorrow price starts to break resistance like this, and then there's a bull flag, it actually could be a setup for upside. I know that sounds strange with this bearish break, but overall, this is still, in my opinion, a very corrective, rangy type of chart. And I don't think it really has cleared all of the support in this regard. So I am open tomorrow for both directions. It really depends on the pattern in this zone, because I do expect a bounce. It depends on how it bounces and tomorrow's break of that pattern. That's basically my plan. Just like today, I also waited for the pattern and the break. Now, I mean, if you're a reversal trader, you might be thinking about 117.50 for upside and looking for maybe a 4-hour candlestick pattern, bullish engulfing twins, some pin bar down in here for a potential reversal trade. However, there is a decent risk that 4-hour candles just go flat like this and price breaks down tomorrow. A experienced trader would be able to get out of that trade probably for small loss or break even. A trader with less experience who's starting out, beginner, maybe even intermediate trader, could get a loss on that one, because reversal trades are difficult. So that's my view on the euro dollar. I saw some remarks on the euro dollar. ZT is expecting 117 to hold, and that makes sense. I can see that view. So let's see. Edith got today 76 pips on the euro dollar. Excellent, great job, really good. Dushan is still in the trade. I think I talked about that. That's great too. And John is saying, I love that pattern. Is it a good trade? I think yes. I think up and downside have potential really. Upside target could be the broken resistance level, for instance, up in here. Maybe even the weekly pivot point. Depends how much animo this has. Ultimately, I wouldn't be surprised if price, bounces at S3 or S2 up about here, about the medium, about halfway, and just makes some correction. This could be an expanded correction. This could be, from a wave perspective, very quickly. This could be a W. We can go up for an X, and we can go down for a W. We could stay here for a while, but let's see, step by step. So Aussie, we can take a look at that. Can I share how I entered? I actually shared it just actually today by coincidence. I was showing my SWAT setup on this bear flag. So basically the SWAT system, I won't show the template again. I don't want to lose too much time for others, but my SWAT system showed an entry here on the hourly chart, this candle. On the 50-minute chart, it had entries somewhere here and here, 2 or 3 entries there. Those were the 15 and 1 hour setups, basically. If you're not trading with SWAT or just using patterns of breakout, I think it's a decent breakout candle there. With regard to future setups, it will depend on the pattern and the candlesticks versus the pattern. So this is my method of trading. So this disadvantage is that I can't really give you specific levels. A little bit. Yesterday I did mention that 113, 118.30, 118.70 is the zone where I expect price to turn, right? But I'm more of a breakout market entry type of trader. Nennet is more of a retracement pending order type of trader with CAMACD. So we both use patterns. We both use market structure, in our analysis. But so we have the same philosophy or same method of vision, but we then, how we translate that into setups is a bit different, and that's okay. That everyone has their own, style in this, and there could be thousands of styles within patterns and market structure. All right, so pound USD. We are looking for, well, basically it looks starting to look like a little bit like a falling wedge. Maybe if we shouldn't use that bottom at this bottom. In any case, you can see pretty corrective mild angle. Minus 272 target at 134 and S1, plus the bottom of that falling wedge, plus the support zone. I think that 134 could be difficult to break. Now, yesterday's candle was not that great. It almost was a doji, a little bit bearish. Ultimately, strong uptrend. This looking corrective. So Neda was talking about a bounce 134 something, right? I think he was talking about even 133.80 in his weekly recap. So all of that I think makes sense. I'm basically the same. Now price is at that zone right now, in fact, and kind of making perhaps even about double bottom. Depends. I think if we get a good bullish engulfing twin on the hourly chart, it could be a good confirmation, kind of candlestick confirmation pattern for the bottom of this, wedge pattern and at support zone. So that might be an interesting move. Now it kind of missed the minus 272 target just by a tad apparently, but if it's really such a small difference, I think it's okay. And but I might go with a stop loss below the minus 272 target, maybe 133. Maybe one. I mean, the more conservative one would be 133.70, 65. It's a bit wider stop loss, but I mean, if considering the target could be R1, maybe even R2, there should be plenty of profit potential to the upside as well. So, in this case, 65 pip risk, 190 target. Yeah, even if it's just the R1. And if it's GR2, it's more, right? It's even 120 pips more, so it's even a 5-to-1 if I did my math correctly. Please double check me. But so that I think should be fine. Tighter stop loss below this bottom. It is an option, of course, on paper. Has its risk because price might, what it could do? It could do like this, make a little bit of a low, expand that falling wedge a little bit, and then bounce. That's the risk. But it's possible, maybe with a small position or other potential trade setup, of course, could be the break. This could, if it does move up, it could make a bull flag, and the next break could be a potential setup too there with upside as it breaks this rising falling wedge. When would it not be a falling wedge? I would really need to see a daily candle or 4-hour candle break below 134, good candle close below 134, near low, good size candle. In that case, price could go down to the minus 61.8 target, maybe even further to the minus 100 target. And it could retrace this, could fall down to this support level eventually, even. Those two are then targets if it does break. I'm not expecting it to break because of the pattern, which looks like a falling wedge or a bullish flag. It's equally fine. It's possible that it could expand to a bullish flag. It's actually something to think about. And we can mark the lines like this. So if it does break through support, as Flavius is saying, then it might turn into a bullish flag. It could fall like this, hit the bottom, and then move up again, move down, and then up like this. And that will turn into a bullish flag indeed. And that could be one more support, the bottom of that flag plus S2 plus the minus 61.8 target could all be part of that reason why price could bounce there. So something to think about too. 133.25. All right, dollar yen. Then we'll take a look at the Aussie indeed. This bounce definitely stronger than I expected. Took me a bit by surprise because this break I think looked good. I liked the entire break of this channel. We had a lower low, so I was definitely expecting the break of this flag in a way, but the flag broke to the upside instead. Oh, like this. So the break of the flag going back to this resistance trend line at this moment, new decision spot right here. But this particular pattern is looking corrective, right, for the moment. So that could mean that this is a bull flag like this, and the break of that flag could see upside. All right, so beautiful patterns. I think patterns are maybe the most important part of trading, whether you use Fibonacci patterns, breakout patterns, candlestick patterns, wave patterns, impulse correction patterns. This is really where you get, I think, the most information, um, from your analysis. And that's why Nanette and I both use so many patterns. We're both pattern traders. We just mostly use the same patterns. The only thing is that I add wave patterns, more or less, is from my point of view the difference, right? But more like for analysis purposes, not really mainly for trading purposes. I don't use it for trading. It's just for market structure understanding, really. So I'm not a big fan of this dollar yen at this moment, but this could be a bouncing spot. If it has a bearish candle like this, could go back to the bottom of this channel. So it could be something to keep an eye out on an hourly or 15, maybe on a 50-minute chart. If it makes a hook back like this, there could be a head and shoulders here, right here, this level, this level, this level. 5 to 6 candles not breaking the high. Maybe a move down, slow upside like this. If it gets here like that, and there could be a bigger move like that. Of course, I wouldn't trade a head and shoulders on a 50-minute chart, right? That's not the point. The point is the bounce off the higher time frame. A bearish candle, an hourly candle closed near the low could be good to wait for before trading anything on the 50-minute chart. And yes, this could be a wave 4. I thought the wave 4 would be finished, and I did expect a bigger correction. But considering the choppiness, this does look like a wave 4 now, and hence the breakout could be an interesting trade. Also, the bounce at S1 and the support level could also be interesting, by the way. The bounce at the bottom of the bull flag, the S1, also something to think about. Because yes, this could be a wave 4. I think so. It's possible. Considering this, I mean, I didn't expect it here. Here I expected an ABC for wave 2. But the break of this resistance and the strong move up is now it's looking choppier. Odd USD. All right. So failure to break this top here with this upside, strong reaction, downside, and I was personally looking for one more leg up, like an ABC zigzag before downside. I was bearish, but that upside didn't happen, and price basically broke down. Although it looked like a bull flag at the beginning, and this is why it's important to look at both sides of the story, both sides of the lines, right? Because this flag eventually broke and accelerated lower. Now, if you wait for that break, the trade would have happened here, which is a bit late. That's why it's also always good to look at opposite lines like this, right? And the trade could have been a bit earlier, right? I think that basically this was probably already a good breakout candle. In that case, you might have been scared of this trend line, but at that point, this trend line, this is more. If this is a bull flag, it would not retrace that deep. You can put a fib from here to here, and if it breaks below the 50, it's most likely not a bull flag anymore. So, sorry, let me get rid of this fib quickly. It's confusing. You see, so at that point, price was already way beyond the 50 fib. Anything when price was still here in this area, look for a bullish breakout as a wave C. But we didn't get the break, so we didn't trade the wave C, or I didn't trade the wave C at least. That never was there, luckily. So that's good. I avoided that. And when it broke below the 50 fib, then you gotta rethink it, reanalyze it, or be prepared for the fact that this is not a bull flag but a bearish channel. That this is in fact a retracement that could be completed, that this is downside break, and this could continue. So this is how you can use levels, invalidation, confirmation levels to keep your, let's say, your bias up to date, to keep your analysis up to date, right? And that's important because if we, as traders, kind of get to, we have an idea about an analysis, right? And we're waiting for a trade to materialize based on an analysis. And if we don't have confirmation and invalidation, we kind of we stick to that mode. But if we don't have those levels in mind, we stick to that mode, and there's no moment of change. We don't automatically reanalyze it. We kind of stick to our view and wait for that to happen. We have basically to put it simple, right? We're wearing pink colored glasses, right? Rosy glasses where we get kind of like confirmations of our analysis. We only see confirmations, we don't see invalidations. Confirmation bias. That's why we need confirmation levels and validation levels, because that's the wake-up call. It's like an alarm bell saying, hey, wait, that analysis I did yesterday, that isn't valid anymore, right? It's time to redo that, to rethink it, look at it from a different perspective, shake it up a bit, and we might come to the conclusion that yes, we need to shift bias to the different direction, or not trade it and just stay neutral, right? So the break of the 50 fib would be such a moment, in my view, if we're expecting a wave forward. Now, in this case, maybe 50 fib is too harsh, by the way. I should say 61.8 fib probably, because typically ABC zigzags bounce at 38 to 61.8. So it's not a wave forward, it's a zigzag. So small correction there, but otherwise, same story. So anyhow, I'm getting a bit sidetracked. Let's move on to what's happening now. Yeah, breakdown of this uptrend, and basically looking, as I explained in my market analysis, looking for continuation of the downtrend. And I think the next target probably the minus 61.8 target. So probably looking for today's candle close near low, same like the euro dollar probably. Look for a bear flag on the Aussie and should be okay for continuation, I would expect. We can take a look at the euro odd quickly to see which one might have more downside potential, euro dollar or Aussie, if we get the bear flag and the daily candle closes on both. And well, seems to be quite indecisive, but at the moment, it looks like the bearish momentum is in play with correction. So as long as price stays below the weekly pivot point, Aussie downside might look a bit better. All right. So Angel, good to see you. No problem at all, and doing pretty well. Thank you. And we'll take a look at gold indeed, Audi. We can take a look at the wave counts. No problem. How are you doing? Did you have some good gold trades this week by any chance, or last week? With regard to Kiwi, we have a trader asking for Kiwi. Same story. pretty bearish candle, looking for continuation to the downside too. Pretty good momentum. And if there is a momentum like that, always don't hesitate to use the Wiz tool. OddCAD, I'm not sure. We can take a look at that. The Wiz tool is great for bigger targets. And price typically makes the most momentum when it is below the third level to fourth, fourth to fifth, fifth to sixth. And you can see that price is below the third now, below the third Wiz level. So I think it looks good for a breakout. It is breaking multiple support levels here. So pretty much in a good downtrend, I would say, obviously. And there could have been some shorts on the Kiwi too, but that was in the past. For the moment, for the near future, there we go. The minus 61.8 target could be a place where price makes a correction. A break of that flag, I would expect a continuation lower to 71 at first. Then maybe 70.50 after that. So that might be annoying in a way because like, oh, but how about now? I mean, why wait for the pattern? But the the problem with that a little bit is this momentum and the fact that it has hit the minus 61.8 target. That's kind of the tad of a problem when you have like a fixed time for webinar. Then it sometimes moves has already hit the target. I wouldn't want to trade it to the opposite side at this target because I wouldn't be surprised if there's a mild reaction to this target, considering the strength of this downside. And the strength of the downside is indicated by the break of the third Wiz level, the angle of this downtrend channel, the angle of the moving averages, the space between the moving averages. Everything is looking pretty impulsive on downside. Let's see. Angel made some very good trades on gold. That sounds really good. Great job, Angel. I'm very happy to hear that. Dollar is definitely strong today, indeed. And for the Kiwi Aussie, I mean, if we get those patterns, I think that they look pretty good. I would say pound looks least interesting of the downside. But once again, if it does break below 138, maybe a small move down to S2, but least interesting. The better ones seem to be Aussie, Kiwi, or perhaps even Euro dollar. Maybe dollar yen, by the way, as well, but an upside. All right, Euro yen, excuse me. This was a good little retracement right here, or here, or here. So those were some good breakouts, but the price didn't really fall too far, but could have been a small little trade right there. Euro dollar was in fact better. I thought the euro yen would be better because of the dollar yen, but the euro yen actually turned out to be a tad worse than the euro dollar. Those things happen. That's because of the dollar yen that broke to the upside. But ultimately, it looks like a five wave down, and I think pretty bearish at this moment. Sorry? Pretty bearish candle price action. But yes, support levels still not too far away. S2, S3 could be bouncing spots considering all of this history. So that's something to think about with the euro yen. euro yen, I'm not sure about. Despite the 5 wave down, I think that not as clear because of the dollar yen and the euro dollar potential bouncing spot at 107.50. So I'm more inclined to stay on the sidelines. If there is a bear flag, I hope it's not too boring, but yes, could be a good breakout. Another scenario could be a zigzag actually, because that could be an ABC zigzag compared to this 5 wave down. At this moment, waiting, pound yen. This actually looks better, but that does not make sense either, um, because of the pound dollar and the dollar yen side. But looks like a bear flag. However, we shouldn't overestimate that pattern, the 1 hour pattern, compared to the 4 hour market structure, which is still I'm trying to find this fib somewhere here, which is showing basically that price is at a support zone. So for upside, probably this trend line important and the pivot point break, pullback, continue. For downside, this purple zone at S1 break, need to see a pullback maybe on a 50-minute chart even, and downside. Otherwise, pound dot is breaking to the upside, but the break is choppy, and the break is looking more like corrective till me so far, right? So we'll have to see how that behaves. 61.8 target or fib could be a target for upside, or the 78, and could still be spots where price moves down to the bottom of this channel. So we have a bullish break, in my view, but the bullish break is not moving that impulsively. So we have to see how far it can get. It could still be a turning spot if price fails to break above this, and there could be a bigger correction like this. All right, gold finally for Angel. I hope that, yes, Angel is there. Great. So let me renew this template. Alrighty. Now, I am not 100% sure. I'm a bit doubtful with the daily, weekly structure. I'm leaning towards an ABC correction, actually, right there. And in that case, if this is an ABC, that means that this could be a 5 wave up. This could be, a correction for W, X, and we could have a Y within a bigger 1 probably and 2, or maybe even an A, B, C within 2. All right. So from this point of view, it could be bearish for price to retest, for instance, the 78.6 fib, 1175, 1150, 1120, and even potentially 1080. Although I'm not expecting that necessarily. So from here to here shows that price stopped at the deep 88.6 fib for the moment. You can see at 1350, 46. So from that point of view, an 88.6 fib could be the primary target as well. All right, and it will make a kind of a range like this that finishes an ABC flat within wave 2. Not typical, but possible. I guess, and that wave 1, 2 could be finished, and here price can go up for wave 3, which should be very impulsive. Within that wave 3, there should be a wave 1, 2, and then a wave 3 of 3 that could get expanded. Now, this doesn't have to be a wave 1, 2, 3, it could be an ABC, but in that case, still expecting an impulse of C as well. In the bigger time frame perspective, this could be a wave 4 completed, and it looks like this could be a wave 1, 2, 3, or an ABC. If this is a 4 completed, it will be a wave 1, 2, 3. So it looks like upside at least till 1500 to 1600, which is then the next decision zone. So if I'm correct and this is ABC, this should be, show some bearish potential, which at the moment it is doing. So from this perspective, this could be a wave C, and there seems to be bearish momentum. Now, how we count this is the next phase of our kind of research as our wave detection or detectives as we are. So let's take a look at this. The oscillator is indicating that the most recent low is the strongest. The oscillator, this is one of my major tips, is basically a very important tool and guide for understanding momentum and correction, and therefore also waves. One of the most important things with waves and impulses corrections, and knowing when those zigzags and impulses and corrections are over, is using the oscillator. It is a kind of a measuring stick for, how to say it best, for basically measuring stick for understanding when the swings are finished, right? When the swings have been completed, what belongs to one piece? What is the definition? A systematic way, in a way, right? A systematic way of identifying impulse and correction. So from this perspective, this would be a wave 3 probably. This could be a wave 4, and we're down maybe for wave 5. So let's take a look at this. This could be a wave 1, 2, a wave 1, 2, 3, 4, 5 of a bigger wave 3. This could be a wave 4. So if we put a fib from here to here, like that, a bit deeper fib than usual, but still within the realm of possibilities, 50 fib, looking for the minus 272 target. So minus 272 target, 1270. Now we know that from this perspective, we would expect price to go deeper. So can it go that deep? It could, if the fifth wave is extended. So it could fall like this, for instance, as a wave 1, maybe like this, wave 1, 2, and then make it 3, 4, 5. So the fifth wave could be extended, for instance. That's one way it could get there. The other way could be that this is not a wave 4, but perhaps this completed a 5 wave, maybe like this, wave 1, 2, 3, 4, 5. Is it possible? Let me count wave 3. $30, wave 5, 27 could be. So this could be wave 1, 2, like this. This could be wave 1, and down it goes for wave 3, right? So in that case, we would get, let me get rid of this fib for a second. Price could get up to the 61.8 fib, for instance, fall down to this target, make a wave 4, and then a wave 5. And you would have a wave 1, 2, 3, 4, 5 to complete the wave C of a Y, of a wave 2, for instance. But if this is a flat, by the way, it also could be a 5 wave. This could be B, C, and it has 5 waves within C to complete wave 2. And then up it should go. So how do we know if this is a wave 4 or part of ABC? Sometimes we don't really, but we can set up measuring lines. For instance, here like this, break below that. This is probably a wave 5, right? A bounce and maybe a break of, hang on. So if we get a bounce, for instance, here, or if we get a bounce like this and a push down, we can put a trend line like this and say, okay, a break above that, and there could be a bigger zigzag going on like this. Right? So that's how we can measure that. So I'm going a bit deeper into the wave counts than usual. This is something I don't even do myself really that often, except the majors, which I share with you in the mornings. Otherwise, I really don't do that for other pairs. And I don't need to really I still trade the waves without necessarily knowing the waves, if you see what I mean. But if you like waves, there's nothing wrong with doing this either. And if you don't like it, then it's not something that is necessarily needed either, in my view. So that's a quick update there on gold, or quick. I'm not sure if it's quick, but OddCAD. Yeah, I agree. Does look bearish. It is facing support right now, in fact. But looks like it will break. Yeah, the odd does, I mean, if today's candle is something like this, it does look like it would be ready for more downside. Agree. So in that case, it would be good to wait for some pattern here and look for continuation. Well, anything else on your mind? I think there are a lot of crosses left. We will not be managed to. Oh yeah, Arjen, indeed, Samuel. I know that you forgot about that. Let's take a look at that. Thank you for the reminder. Let's see. There it is again. All right. Break it down very quickly. Monthly chart. Well, certainly pretty rangy. About halfway the range right now. If it is ABC zigzag, minus 270 target is the target. 92.50. Price and uptrend, higher highs, higher lows, good trend line. And but also a resistance spot. Like that. Looks like a bit of a rising wedge actually. At this moment at least. Pretty close to the top of that rising wedge. Daily chart. Looks like we could get divergence between these tops, but it's not really certain as yet. bearish candles away from the R1 and resistance. Fourth bearish candle. Aussie looks to be breaking as well against the yen. Yeah, so considering if this is a breakout candle, it's close to S1 at the moment. But if it is a breakout candle like this, I think that Aussie should even be showing weakness against the yen. But the dollar yen depends on the dollar yen breakout. If the dollar yen breaks to the upside, this Aussie yen could just be become a bit more choppier. And not really move up that much because the Aussie side is weak. Let's take a look at the hourly. Seems to be making some kind of zigzag at this moment. So I would be interested in the continuation to the downside, but at this moment, I think that it might not be a good moment to trade because it's making kind of a falling wedge here, despite the break. Not a good breakout. So either, yeah, I would need to see the dollar yen. I'll keep an eye on the dollar yen. I think that Aussie is weak, but I'm not sure if the yen is the best. I think that if price gets maybe back to this top here, it could be a sideways zone. That might be something more interesting up in here for a turn potentially. And price might fall down to the minus 272 target, minus 61.8 target like that. Upside, I'm really not that interested in, for the moment at least, because of the break of this support trend line that we see. And we see also the pretty strong reaction towards this resistance zone. And from this point of view, there's pretty good space down before we hit really major support level at this bottom, or these bottoms, and the support trend line. So from this point of view, I think there is bearish space with, of course, with the targets in between. Not to forget, but yeah, roughly speaking, within this uptrend channel, there could be some space to the downside. Could be some space to the downside because it's counter trend trading, and those could be choppy. So I'm not a big fan of this currency pair that much, as you can see, because of the rising wedge, and we're kind of halfway to rising wedge, but we broke a support line, so they're kind of like contradictory signals in a way. So I'm not probably that big fan of it, but if it gets somewhere in here, it could be worth thinking about. Or if it breaks, if it goes sideways like this, but doesn't even get that high like that, and then breaks the support, it could be ready for a move down to first 88, then 87, 30. Yeah, if it gets up in here, a pullback would take some pressure off of that. I think so, indeed. And if it breaks above this, then the next zone of resistance looks to be up at the weekly pivot point up in here, 89.25-ish. Thank you, Dushan. Great to hear that. Happy you like our articles. We try to make a daily update with Elite Currency. We will probably show a little bit more analysis than educational articles in the future, but those seem to be, I think have a little bit more maybe practical value in a way. But let's see. We have a support and resistance guide coming up, and I think that could be an interesting one maybe to keep an eye on. I think maybe next week. All right, folks. Well, let's take a quick look before we close here. what's going on right now. That does not look like a good dollar yen close to me. So not so sure about the break or bounce here. Still waiting. There's a small reaction to these support levels, but not too much. Still very minuscule reaction, but could be a first kind of indication that price is indeed not continuing lower as already kind of expected. So reversal traders might be thinking about some bounce trades here. That all depends on the level of each trader has as types of aggressive entries or not. This, from my point of view, is aggressive because of the bearish momentum and because I think that there could be a higher chance of a bear flag continuation. But sometimes, aggressive trades work out if we get bigger reversals. Alrighty, well, please check out Idle Markets MT5 Supreme Edition as well, and check out Nanette already had a webinar on it, so you can see the differences. And that could be, apparently, Nanette said it to me, is faster, more efficient. So maybe worth thinking about more webinars, Masters of Trading, and here's Forex CFD webinars, of course, later this week, tomorrow and Thursday, and a lot of analytics here too, of course. So check out admiralmarkets.com. And thanks for joining. Thanks for your questions, for your chats, and good to see everyone here. And hope to see you tomorrow. Cheers.